how to understand market structure, or what is actually market structure. Now, in trading, market structure simply means the way price moves on the chart. Essentially, it is called, or it is known as the skeleton, right, or framework that shows whether the market is trending up or down or ranging sideways. Right? So the market can either go two ways, but we also have the third way, which is not really that relevant. So it can either go up like this, or it can either go down like this. All right, or you can either just range like this. So these are the two ways market moves. And the third or the last one is uh, sideways movement. Okay. Now is it's about reading the sequence of highs and lows that price creates. We're going to talk about these highs and lows, which helps traders understand who is in control. Is it buyers, which are also known as bulls, or is it sellers? So this is the definition of market structure. Essentially, market structure is the skeleton or the framework by which the market moves. So market moves with this framework, right? So there are actually two main types of market structure, right? But we have the one that is not really that important, because why you understand why I mean by is almost similar to the first two, which is this ones here, right? Okay. So the first market structure is called uptrend, the bullish structure. Right? So price forms higher highs and higher lows. It shows buyers are what in control. Now let me show you what I mean by that. Right? Okay, so let's go down. So this is a bullish trend. So the market is going up, right? The market is rallying and is going up. Now the market doesn't just fly and go up to a particular point. The market will have to make a series of higher highs, higher lows, higher highs, higher lows. Now, the bottom that the market makes is called for an uptrend is called higher lows. Now, the high the market makes is called higher highs, right? Because it's higher than this previous low, right? So this is higher highs and this is higher lows. Now, this high is higher than this high, right? This high is higher than this high, right? So essentially, this here are what higher highs in bullish trend, right? So we can also say when market is making higher highs, it's also doing what they call breaking of structure. So this is the first structure that the market has made, right? Now, once market breaks this previous high, it is known as what? BOS, right? Break of structure. Essentially means break of structure. All right, and you most likely find uh break of structure at this high. So once price moves from the higher lows and breaks this previous swing, is known as what? Break of what? Of structure. Same thing here. This is what known as what? Break of structure. This is known as what? Break of what? Of structure. This also is known as what? Break of structure. So once market is breaking series of swings and making new highs, you see that is what is breaking of what? Of structure. Now it's same thing for the bearish trend, and I will show you that as okay. So let's go to the the bearish structure. Okay, so the bearish structure is a downtrend, and our price moves lower lows or forms lower lows and lower highs. Right? It shows sellers are in control. So for bullish, the uptrend, buyers are in control, right? Buyers are in control. But for bearish, sellers what are in control. So sellers are tanking this market, buyers are pushing this market aggressively. So when you have a downtrend, sellers are in control. When you have an uptrend, buyers are in control. Now, even if we have small pullbacks, because this is known as pullbacks, this right here is known as pullbacks. And in the next video, I will teach you guys about supply and demand, order flow, so you understand how we get these pullbacks here, right? Okay, so that's one. So let's check the bearish structure so you understand the bearish structure more. Okay. Okay, take me somewhere here. Okay. So this is how the bearish structure looks like. All right. So similar to the bullish structure or uptrend, this one is just going down. So sellers are in control in this type of structure. As sellers are going down, as sellers are pushing the price down, it's creating what? Break of structure. Right? These are what? Break of structure. So you can see a series of lower lows, right? This is lower lows, lower lows, lower lows. Now, what makes it a lower low is because this low is lower than the previous low. This low is lower than the previous low. This low is lower than this previous low. Understand? Now, uh, we also have what we call lower highs, right? In the bearish structure. Why is this lower highs? This high is lower than maybe this previous high here, and this high is lower than this one. This high is lower than this one. Sorry, and then this high is lower than this one, right? So this is the basic explanation of market structure, right? Okay, so now let's look at the sideways. Okay, so the sideways, so if price moves between support and resistance without clear higher highs, higher lows, or lower lows, lower highs, neither buyers nor sellers dominate. So essentially, what this is saying is that what we have is that we have the market doing something like this. That here is known as resistance, and this right here is known as support. So I'm just going to clone this. I'll place this as support here. So this is sorry. So this is known as what? As support. Okay. So now, why has this thing not changed? Did I click OK? Okay. Okay. So price is moving this within this range, and this level right here is serving as a support. This level is serving as a what? A resistance. Right now, market most likely will still be trending up. Right, will still be trending up, maybe in the lower time frame. This is what we call, the market is actually fractal. So in the lower time frame, we'll still be getting trends. But when you go to higher time frame, you see that the market is what? In a range. Right? So you can also trade with this market structure. So there are unique strategies that you can use to trade this type of what? Market structure.